Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. In this video I want to do an update to the 111 trade. We're going to also look at the 112 trade. This is very similar to the 111. You just add an extra naked put. And then we're going to look at how to manage these positions a little bit more detailed than the previous video. Link for the previous videos down below if you want to know the mechanics of how to set up the 111 trade. So in this video I'm going to do a quick overview of how to actually implement the trade and then what to do if the MES or whatever stocks you're doing is going up a lot and then you can just close it out, or if it starts to go down, how to possibly manage it. We'll also go over different alerts that you can set up on Thinkorswim in order to try to maintain this position and be in relatively good shape. So anyway, if you have any questions or thoughts, leave a comment down below and let's get right to it. All right, so the main reason why I want to make this video is I did set up a 112 trade about 3 weeks ago, and it's starting to be a little bit challenged. Right now in the future market, it's actually open today on Monday, June 20th. It's actually up about 1%. So it's in relatively stable shape because of that. However, the short puts were at 0.2 delta at one point. So I wanted to come up with a way to help manage these positions if that short put does go against you. It could actually show pretty massive losses if it gets way past your short strike and goes down quite a bit more. This is pretty interesting times with very high volatility, and it doesn't typically will happen the way that it has so far, but again, can't hurt to have a plan in place when these situations do happen. Okay, so this is how I'd manage a 111 and a 112 strategies when they either go with you or against you. So first, what is a 111? You're going to be buying a put debit spread, debit around 10, and then typically that ends up being around 0.25 delta. I like to look around 30 to 45 days to expiration. Sometimes you have to be a little bit less picky on that because MES is not staggered in expiration dates as much as ES, but still easily could find 30 to 45 DTE at any time. At that point, you're going to sell a naked put around 20 of a credit, and that delta is typically around 0.08 or so. And this results in a net credit because we bought the debit around 10 and then selling a naked put around 20. 112 is very similar. Only difference I change right here is you sell two naked puts, each around again around 0.20 of a credit, typically 0.08 delta, and a little larger net credit at first, but you do use up more buying power with the 112 because you're adding an extra naked put. This is a 101 trade that I'm starting on 6/20, 39 DTE, so 39 days to expiration. Right now, MES is up about 1%. You could buy the 37.40 put, sell the 34.20 put. That's a 50 with, and then that had a net debit of about 10. And then you could sell the 31.90 put. That was a 0.08 delta at this point, and you would have a net credit of about 10. There's a good chance that this would fill. If it doesn't, you could go slightly less credit and wait it out a little bit. It usually fills at that price. This is the Analyze tab that you'll see on Thinkorswim. You'll notice that the buying power to start this trade is $389. If it goes higher or stays where it is, you'll have a net credit of $50. I tend to leave at least the same amount of buying power in cash. So leave about another $400 in cash. You're at about $800 total. If you do 50 divided by 800, you get about 6% return in a little over a month. This is a good return. And that's if the stock MES just stays where it is. If it starts to decrease and goes past the short strike that you bought in your put debit spread, you'll be able to make up to $300 max profit. And this is at expiration on July 30th. Your break even is a little bit lower than the naked because of the debit spread. We're looking at 31.28 and change for the break even point. Now notice the pink line, this is for today. And then the green line is at expiration. The pink line will head towards the green line as the days get closer to expiration. But if, say, MES dropped quite a bit, Right now we're at 37 and change or so, 3,700 and change. It could start to be negative if it does a quick drop in the next few days. And that's what I'm currently in a situation on right now. Does a 112 trade, the exact same strikes as the 111 trade, same expiration. And you'll notice that the net credit, if MES stays where it is or goes higher, is $147, which is greater because you have an extra naked put. The max gain is $397, but the buying power is more because you have an extra naked, and that's $828. Now, how do you manage these? If it's a profitable trade, I think a good rule of thumb would be to take profit and close everything at about 80% of initial credit. If it's way higher, you could actually let it go to expiration if you want. But I think taking 80% or so and then entering a new trade either right after that, or if you see a down day and then implement your money in a new position might be beneficial at that point. Yeah, it's up to you. If you want to be a little bit more hands off, you can just let it expire if it's profitable. Now, where it gets a little confusing at times is what if it's getting challenged and MES starts to drop a bit? I like to manually watch the naked short delta. Remember, starting around 0.08 delta. If it goes about double or 0.15 delta, that means MES is starting to go against you. I like to set an alert at this point on Thinkorswim, and I'll show you how to do that later. When MES is about 3% or so lower from the current price where this happens, you could also set it around a 0.2 delta. Now, if this alert doesn't trigger and MES is staying where it is at this point or goes up a bit, you can just wait, collect your 80% profit, and then enter a new trade, just like we mentioned before. But if the alert does trigger, you want to look at when it triggers and look at your total profit and loss. If MES happens to do this with only a few days left to expiration, you still might be at a profit. There's a good chance you might be at a profit too. I think you could collect about $30 if it was a 1-on-1 trade where you're initially trying to get 50. That could be usually worth it. And you can start a new trade. Okay. But now, if you're at a loss at the 0.2 delta, which is a pretty good case if this happens pretty quickly, then you want to set an alert about 100 points above the naked short. So if you sold the naked short at 34.50, set an alert at 35.50. The delta would go up a bit to around 0.3 delta at this point if it does hit that with at least a week or two before expiration. If this alert doesn't trigger, then you'd probably want to close it around 7 days left. If this alert triggers and you're already at 0.3 delta still going against you, at this opportunity, you might just want to close this thing and close the debit spread at a profit. Obviously, that will be at a profit because MES is below the debit spread strikes. And then you can consider closing your naked, sell 2 naked puts, again, 30 to 45 days out at a similar premium. So the premium will be at a loss. You are closing that initial naked at a loss, but then you would want to sell a new one with the same premium, and you're just trying to break even on this short put trade, essentially. That will be at a lower delta because you're getting another 30 to 45 days out to wait it out. So let's go to Thinkorswim and we'll see how to actually implement these. The trade tab here, I have the 112. The short strikes at 31.90. Net credit is about negative 30. So 30 credit times a 5 multiplier, get $150. Then you subtract commissions. When this strike hits a little bit below it at around 0.15 delta, which we could look it up. If you go to the 39 DTE, obviously it's going to change when the trade's in place, but right now the 0.15 delta is about 33.30 or so. What you can do is right click, create alert when it hits this strike. Okay. Now obviously it's going to change a little bit as you get closer to expiration. Easier way is just to right click the actual price, set alert, 33.30. At or below. You put messages that go to your phone or email. You could decide where to get notified and then click create. Okay. Now, once it hit that 0.15 delta, you probably want to set a new alert about 3% lower than that. Again, just notice what the price of MES is, times it by 0.03, and that's how much lower it might be able to go. Create alert at that new price. Okay. And so again, I'm the investing teacher, high school science teacher, teaching others how to invest. If this video is helpful, please share it with others. Click that thumbs up. Leave any comments down below. I'll make sure to respond and read to all comments left. And happy trading out there. Don't be too worried when MES drops a lot. These put debit spreads are very easy to manage pretty well because you're going to get a decent profit if it happens to drop. Have a good one, guys.